Welcome back, everyone, to Invest the Rest. I have a great video for you today. We're going to go over all three of my accounts, all three of the strategies that we've been tracking throughout 2025. That includes the growth account, which is shown on the screen here, the dividend account that's focused on high yield dividend ETFs, and the option trading account. The video frequency on my channel has been a little bit less over the last week, and I've combined all three accounts into two overall summary videos. And the reason I've done that is because in a bear market, there's really not a lot of updates, right? You can see on the screen that this growth account is quite significantly in the red, right? Showing a negative total return on investment. And in a bear market, as the market continues to decline, it's been very, maybe some of you would see it as depressing, negative news continually over the last 4, 5, 6 trading days. There's not a lot of moves to be made other than buying additional funds and keeping an eye on opportunities for some of those option trades. Now, if you haven't been following my videos up until this point, I started 3 accounts at the beginning of 2025. Each account and each strategy was funded with $10,000. We have a low to medium risk growth focused account, which is on the screen here now. We have a $10,000 high yield dividend account that is focused on monthly cash flow payments or income payments from dividend ETFs. And then I have a $10,000 option trading accounts that's focused on selling call and put options to harvest the contract premium and create, again, a monthly income from that premium payment. Now, the option contracts, right, that's more active trading. The growth and the dividend, that's a little bit more passive trading, but I do have some good updates on all 3 accounts. Now, before we get into the details, as always, this is not financial advice. I am not a financial advisor, and this is for entertainment purposes only. My videos kind of go over my own financial journey and what I've experienced in the stock market. So on the screen here, we have the $10,000 growth account, not a good story. Our biggest loser being FBCG at minus almost 10% negative returns. Everything is in the red except for FDLO, which is a Fidelity Low Volatility Factor fund. But again, even though it's green, it's only 2.45% in the positive, or $14.78. So not a lot of excitement in this account so far. However, one thing I do want to highlight, yes, we're negative 6%, negative 5%, negative 2% on all of these funds, right? We're seeing a negative return, but I think this really demonstrates the stability of this account. If you've been following the stock market for the past 6 to 7 trading days, it's been all negative news. It's been declining rapidly, and you see a lot of sell-offs happening pretty much across the market in many different sectors. For this account to only be down 4.51% in the red, I think indicates that it has a very strong resistance to a bear market. I think it's very stable. I've seen many stocks, industries down 10, 15, 20%, and all of these funds combined only being down 4.51% gives me a lot of confidence in this portfolio once the market does swing to the upside. Now again, this is my long-term invest, buy, and let it sit account. I'm not selling, I'm not buying. I invested $10,000 in these funds, and I'm going to continue to let that grow for many months, if not years, into the future. So changes are low, volatility is low. I am down 400, I almost said 4,000. I'm down $446.83 on that $10,000 initial investment. So hopefully the market, in the coming weeks takes a swing to the upside, and we'll see some of these negative numbers turn positive, and I'll obviously keep this account updated as changes occur. Now, switching over to the $10,000 dividend account. Okay, quite a few interesting things in this account over the past week. First, I want to highlight the 2 dividend payments that were announced at the beginning or middle of this past week. On 3/5, we got an announcement on Cony, C-O-N-Y, and also on our only weekly paying dividend ETF, QDTE. So Coney, 59 cents, rounding up to 60 cents per share. We have 75 shares. That gave us $44.92 for our first dividend payment in March. I did not update this title right here, which I will do right now. So March 2025, starting off with that $44.92 payment from Coney. QDTE, a little bit lower, 15 cents per share. I have 13 shares, and I will receive $1.97. Now, if we compare this payment up above to February, we look at Coney, it's about a little bit more than half, right? Coney paid $1.04 in February and paid only 60 cents in March. Again, looking up in January, Coney paid 83 cents, obviously still better. And in December, Coney paid, if I can find it here, $1.34. So of the last 4 or 5 months, depending on how far back we go, Coney is currently demonstrating the volatility that these funds can, that they can portray, that they can go through, right? 60 cents lower for Coney, and that's because of the market downturn. And it is what it is. Like I said, at the previous month in February, some payments weren't as good at the beginning of the month, and then the payments from the ETFs at the end of the month were quite significant, right? We talked about the PLTY that paid a massive $5.93 dividend. We may get that for the rest of March. We have a long way to go and a lot of other funds to cover, right? Or to be announced for their dividend payments. So $46.89 in March so far in dividends. And like I said, we have quite a ways to go. Now, we do have that $540.66 total from February. And as promised, that will be reinvested into the portfolio to lower our cost basis. That's demonstrated right here in this highlighted table. Excuse me. I put together this plan and I executed this plan today. So I decided to buy, and part of why I decided to buy these funds is I wanted the most bang for my buck, right? So SQY, right? We take a look at SQY right here. That is the fund that has the most significant negative percent return, right? It's down 26.82%. So I said, well, I want to lower my cost basis on SQY, NVDY, which is also down, and start to chip away at some of that negative return. So I bought 5 shares of SQY. I lowered my cost basis to $17.95. Because of the fantastic payments on SMCY, I decided to buy another 5 shares of that. Lowered my cost basis to $25.75. NVDY, again, because of the volatility, you guys know that I like NVDA, NVDY, and NVDX, which I trade option contracts on. I think NVDY will recover, so I bought another 5 shares of NVDY and lowered my cost basis to $22.95. Now, evening out the QDTE, QDTE is a more expensive fund at $40 per share. So I did buy 2 shares, so we're going from 13 to 15 shares of QDTE and lowering my cost basis further to $39.52. The last fund I was able to afford, right, based on the dividends from February, was MSTY. I love this fund. It's paying very good dividends on a very consistent basis. So another 5 shares of MSTY, lowering my cost basis to $26.95. Now, despite investing and continuing to make those dividends work and earn dividends on dividends to create that dividend snowball, you can see here the percent return overall is still relatively red, right? We do have a couple funds, SMCY, PLTY, 4% and 3% in the green. And that's really a testament to the massive dividend payments outpacing the capital loss in the fund. So total capital loss is just over $2,000. but we've earned $1,100 of dividends. Okay, so this account overall roughly about down $900 or 9% in the red. But again, this is a less active account. This is probably between the growth and the options account as far as activity goes. Yes, I'm going to take those dividend payments and I have to buy at the end of every month to reinvest those dividends. But other than that, I'm letting these funds sit. This is a long-term play for me. And I'm going to continue to collect those dividend payments, that monthly cash flow for the long term. Now, I do track capital loss, capital gain in this account because the exit strategy when I do decide to liquidate this account is pivotal, right? I want to exit funds that are in the green, right? Or net zero. I don't want to exit this portfolio if I don't have to when the market is really down, right? Because I'd end up losing quite significantly and I would end up basically paying back all the dividends that I've earned. What I want to do is track the capital gain or capital loss for each fund individually and the portfolio overall, so I have a good indication of where I'm at and at what times it might be lucrative to exit any of these funds. So that's why I track it in this account, because it's very pivotal to my exit strategy towards the end of 2025. So that's the update for the dividend account. Again, down 9%. If I go back to the growth account real quick, down 4.5%. So you can see that the dividend account when the market is down takes quite a bit bigger of a hit as far as capital loss because the dividend payments can't keep up. So down 9% there, not too bad. Again, I thought it would take a bigger hit in a bear market, and I am pleased with this performance considering the market conditions. I'm not panicking yet. Lastly, switching over to the options account, okay? Couple changes here. It's been very difficult to find lucrative opportunities to sell calls or sell puts at the strike prices that I need to sell them at. However, March 5th, I sold my first call contract, okay? It was on MSTU. MSTU went to the upside just enough, starting to recover, where I was able to get 80 cents per share or $80 for the 200 shares, right, of those two of selling those two call option contracts, right? Normally an option contract is 100 shares. I have two of them because if you remember from week 7, I got assigned two sets of 100 at $8.50 a piece. So I sold two put contracts of MSTU, both for 100 shares each. Got my premium, which totaled $78.66 for those contracts. And I did end up getting assigned those 200 shares for $8.50 a piece. So looking down here, now because I got assigned selling the put, right, and now I own those shares, I turned around to sell a call, right, which means that the buyer buys the contract from me and reserves the right to buy my 200 shares of MSTU at a price, strike price over here in column K, for $8.50 a piece between now and March 14th. Now, MSTU has to get above $8.50, which currently it's at $6.86. It has to get above $8.50 for that to be a lucrative contract for the buyer. If not, I keep the premium, the buyer doesn't exercise their rights, and I also keep my shares. Now, if MSTU does make it above $8.50 between now and March 14th, the buyer may execute their contract so they can buy at $8.50 and then sell those shares on the market for whatever price it's at. Like let's say if MSTU goes up to $10, they can buy my 200 shares. I have to sell them at $8.50 a piece. And then that buyer can turn around and sell those 200 shares for $10 a piece, right? And they would pocket the difference. So I did open the call. MSTU went high enough for me to open that sell those two call contracts at an $8.50 strike price. I received $78.66 for selling that contract. And again, that contract expires next Friday on March 14th. Now, the second contract that I was able to sell, and man, did I use the last little bit of money in this account to do so. Today, March 6th, I sold another put contract. I said in the last video I was not going to sell more put contracts. I didn't have the money. Well, you know what? MSTU went low enough today, got it during a dip where it made sense to sell that put contract. So I sold 100 shares or one put contract. I got $46.33 in premium for selling that. And again, remember that premium goes directly into my account when that sale is made. So that money is mine, regardless of what happens to the contract. I sold at $6, which means that if MSTU between now and March 14th drops below $6, the buyer of my contract may exercise their rights to force me to buy 100 shares at $6, right? They could sell it for, let's say MSTU goes down to $5. The buyer of my put contract owns 100 shares. Well, they could sell at $5 a piece on the open market, or they could exercise their contract rights and they could sell to me for $6 a share, again, pocketing the difference. So MSTU has had the most action. MSTU has gone up and down closer to my previous strike prices that I got assigned in week 7. And again, selling a put contract at $6 that if I do get assigned will continue to lower my average cost basis of owning all of these shares of MSTU, right? Because if you remember, I do own 100 shares at an $11 strike price, 100 shares at a $12 strike price, from week 3. I own another 200 shares right here of MSTU from week 7 at an $8.50 strike price. So if this call contract expires worthless and this put contract gets assigned, I will continue to lower my cost basis. I'll own 500 shares of MSTU, but that $6 strike price will lower my cost basis even further. So not a lot of movement on NVDX, right? Shifting over to NVDX, not a lot of movement there. I do own 300 shares of NVDX that got assigned in week 7. 2 of those contracts were at $14 strike prices. One of those contracts was at $13 strike price. So a cost basis of, I don't know, right around $13.75. You can see the current price is $8.29 for NVDX. And NVDX hasn't quite gotten high enough yet, hasn't recovered enough to make it worth it for me to sell calls at these strike prices. I have to wait for NVDX to get a little closer to my strike prices where my put contracts got assigned, and then I can start selling calls and really harvest a nice premium. The same goes for MSTY. Got assigned at $26 price, which again, I think $26 is a great price for MSTY. And it's currently at $22.59. It has not gotten close enough to 26 for it to make sense for me to sell a call at $26 strike price. So for MSTY and NVDX, I'm really waiting for the price to increase just a little so I can get a nice premium either this week or next week for my March total. The nice thing about MSTY, we just went over it. It is also in the dividend portfolio. Okay, MSTY in February paid a dividend of $2 per share. Now, I own these shares. Now, granted, this is an option strategy account. I'm focused on selling puts and selling calls. But if the price doesn't get high enough for MSTY for me to sell a call contract at $26 strike price of MSTY before they announce their dividend for March, I will get the dividend times 100 shares. So If it was a $2 dividend again in March and I own 100 shares of MSTY, I will receive $200 in additional dividend income in this account. And that's just the nature of MSTY being a monthly dividend paying ETF. If you traded options on Coca-Cola and you were assigned some shares and they announced their dividend while you had those shares before you sold a call contract, you would get that dividend payment because you actually own the shares. So it is a plus side of trading on funds that do pay a dividend. Again, I prefer funds like NVDX and MSTU that have higher volatility because of the turnover rate. That works better for me. I'm more confident with that strategy. However, MSTY, TSLY, some of those high-paying dividend ETFs, they do have fairly good option contracts available. They have decent amount of volatility, and therefore they have decent amount of option premium that can be harvested. And if you do get stuck holding on to them, no big deal. You get to collect the dividend until it recovers. So I'll keep a close eye on that, and that will go into whichever month it pays will go into the monthly total for that month. So if MSTY pays a $2 dividend, and we don't sell those shares before it does so, $200 will go to the March total because I'm tracking it by account, okay? Not necessarily by strategy. Scrolling back up here, so those are the two trades. Again, keeping my eye tomorrow, the last trading day of the week on NVDX, trying to get some call contracts sold on NVDX. Hopefully it spikes in the beginning of the day and I can get some call contracts opened for next Friday. So we'll be taking a close look at that tomorrow morning. Total assigned hasn't changed, $10,700. Total exposure, there's that $600 from that put contract that I sold today. And that brings our total up even higher to $11,300 of resources utilized in these contracts. Account balance, $11,549. So we're about $250 under our absolute max account balance. I've collected $1,549.55 year to date in premium payments. The March total for this account, $124.99, right at $125 for week 1 of March, which isn't too bad considering the market conditions we've been dealing with. Before we move on to the summary, I want to scroll over here real quick to my new table, right? We're trying to hit that 6.5% ROI goal every single month. I put the $124.99 in the table. March percent is down right now, right? We're at 1.09%, but we have 3.5, I'm going to say, based on when March ends. I'll have to look at a calendar, but we're about 3.5 weeks left. We have quite a bit of time to make up the remaining ground. We do need to get to $12,079 to maintain pace of that 6.5% every month. I got to get to $12,080 to start the month of April. So we have a little bit ways to go. We're currently at $11,549, as I said. So we got about $500, $550 that we have to continue to harvest from these contract premiums. On average, right, if you take all the months year to date, 4.96%, 5%, I figured I would start tracking the average because, like I said, some months will be good, some months will be bad, and I wanted to overall, on average, get a 6.5% return. All right, so had a little bit of technical difficulty there, but like I was saying, really trying to hit that 6.5% return on the rolling average. So we'll continue to track that. And I really hope, because it's so early in the strategy, that April starts off in the green at a balance at or above our target in year 1. So if I scroll back over, that is the update for the option account. And lastly, I do want to cover the summary because I think it tells the full story, right? The $10,000 dividend account, like I said, down quite a bit, almost $900. The growth account down about $450. And then again, that option account, keeping everything afloat at $1,550. So we're almost net zero, right? We're at $210 in the positive. But we've seen very terrible conditions. The beginning of the year, January through mid-February, was very volatile. I'm not going to say it was bad. The market hadn't started to dip yet, but it was up, down, up, down. It wasn't very consistent. And there was a lot of activity. There was a lot of uncertainty, but we made it through that period. Now we're in a period of a downturn. The market's been down the last 4, 5, 6 trading days, but I'm not nervous yet. I have a lot of faith in this strategy, these strategies, these accounts. And I think if we stay true to the strategy, we do what we said we were going to do, I continue to follow my prescribed actions based on the account, that on the short to middle term, right, between now and maybe June or July of this year, we will end up coming out on top. Now, that remains to be seen. Again, this is kind of an experiment to see how these funds do against each other. Is one successful? Are the other two unsuccessful? Only time will tell. But we're going to keep hitting it hard. We're going to keep staying true to the strategy and continue to track the progress of these 3 accounts. Thank you so much, everyone, for your support. The subscribers are continuing to increase. The like counts, the comments, the activity on my YouTube channel is just, it's a thrill, right? It's a thrill for me to see it. I'm really happy that everyone's starting to like this material. A lot of returning viewers, which means you guys are watching these videos and following along, which is really cool for me to see. Subscribe to the channel if you haven't already. That'll tell you when new videos come out, new account updates, if you turn notifications on. Please, please, please like the video, comment. You know, it helps, right? It helps get it out there on YouTube. It helps the algorithm. And it really helps me stay motivated to share this content and continue to produce content on as close to a real-time timeline that I can, right? I do my videos at night, right after the market closes, so that we can cover real-time information before the market opens the following day. And that keeps me motivated, right? No one here wants to see videos that are financial strategy and financial data that's 3 days old, because it's already irrelevant, right? We want to keep it fresh. We want to keep it real time as much as possible. So once again, let me know what you liked. Let me know what you didn't like. Let me know what you want to see. And as always, everyone, thank you so much for watching. I'll catch you on the next one.